Eric Mwather with another mentorship video. Let's take a look at the positions that you sent me. Just want to take a look at what the charts look like. We begin by taking a look at SWIR, and this one still looks good, having broken out above the prior weekly closing high. And the good thing here is, just from an educational standpoint, is we had this weekly closing high there. So there was a weekly closing high, and so that's how it looked. We had 2 weeks down after this close. So any breakout after this 2 weeks of rest here and here is the minimum requirement. We need at least 2 weeks of rest before we can say this is a fresh move. So this was exactly what happened here. I call this week number 4, and so we begin by counting number 1 here, and then you count 2, 3, and then the 4th week is the minimum on a weekly chart, so number 4. And it is also the same thing on a daily chart. You need at least 2 days of rest before going back into a stock that is breaking out to new highs. On the monthly, it is slightly different. You get a monthly close, and then you have 1 month down, and then after that, any month after that. So month number 3 on a monthly chart is the minimum requirement. After 1 month down, you can go and buy this as early as the 3rd month after this high. So month number 1, number 2, on the 3rd month, you can go long. And why is that important? Because this is when the stock is having a fresh move. So here we see a fresh move because we had 2 weeks of rest, and then 4th week we break out. So this is not a continuation of this rally. It is a new move after a break period here. So just understanding the minimum requirement there sometime can help you know when to chase a stock and when not to chase a stock. So this one looks good. Take a look at the daily, and you can see the daily here breaking out again, and that's good. RSI is above 69.1, and that's still good. One of the reasons why I thought this one was a candidate for momentum is because we see clearly here that the RSI is trading above 69.1 on the monthly, with an opportunity and a likelihood of breaking out to new highs. If it can somehow get above these highs, you're going to see another thrust to the upside. And the stock's been doing well for a while. Now, I was talking about a month number 4 breakout. Here's an example. You got stock recorded a high there, had 1 down month, and on the subsequent month there was a breakout here, and all that happened while the stock was trading above 69.1. So whenever you see a breakout when the stock is already above 69.1, it is just a sign of strength. Just like we had another breakout here recently, which was above this prior monthly closing high, and the breakout took place with the RSI already trading above 69.1. Sign of strength. Let's go to the other idea that you own currently, and we begin by taking a look at the weekly SWKS. I believe the entry point there you show at 70.17, so I would say somewhere here currently. Now I might have a problem with the entry level here, because if your entry level is at 70.17, then it is here. And I think based on the weekly chart, the most recent entry point was here. So this one, from an entry point, we'll go and take a look at the daily, but from an entry point, this was the most recent logical entry point after these weeks of rest. Since then, we haven't had the 2 weeks rest and a breakout. So I think here, buying this one, even though it could do well because the RSI is above 69.1, the problem is you haven't had any rest period. Now take a look at all these periods here when the stock would rest and break out. So there was a rest period here, and then a breakout. Somewhere there. A rest period here, and a breakout. Rest period here, and so you want to buy the breakouts, and a breakout. Another rest period for a couple weeks, and then a breakout. another rest period here and a breakout. So you're buying the breakouts, and another breakout there after some couple rest periods there. And there was also another rest period here and a breakout that eventually failed. So this breakout did not work out here because the stock came down. So your entry levels would have been at these levels here, these breakouts to new highs on the weekly. Even here, even this would have been a buy, but it failed, so you get stopped out here. My point is, on this one here, I don't see a reason to have bought the stock based on the weekly at current levels. Now if I go to the monthly, I know the stock's monthly RSI is on fire, and yet again you see there's no rest period. So the last monthly breakout was here. You made a high there, had 1 month down, and then broke out again. So ideally this was your most recent entry level on the monthly, and that coincides with the RSI also looking to move to 3-year highs, eventually move to 3-year highs. And so that you can see here there hasn't been another down month since then. So buying it here, quite frankly, from a technical standpoint and just from understanding that you need a rest period for a nice move, fresh move, this one you bought at the wrong time. Take a look at the daily. Now the daily is showing a short breakout on the daily. There was a daily closing high there. You had 1, 2, 3, 4 weeks down, 4 days down, and then a breakout. So I would use this 68 level somewhere around here as a stop level, because this is the most recent high, and then a rest period which took 5 days and a breakout. So your entry level was here, somewhere here. So really buying it at 70 is buying it slightly extended from the breakout, and also no breakout on the weekly, no breakout on the monthly. So I would say this one is, to me, more of a risk trade, but the stop should definitely be at the prior daily closing high somewhere here. So I would use that as a place to get stopped out if the stock drops. Otherwise you can own it because the weeklies and the monthlies have a lot of momentum, but from a timing perspective, not the best spot to go long. So the next idea on your list is SBUX, and I believe the entry level is at somewhere here at 80.61. That's your entry level. So 80.61 is your purchase price, and that makes a lot of sense because I had sent this out as a buy because of this breakout. So the previous high on the monthly was here. We had many months of rest period. All this is rest period, and then so let me clear that off because it looks a little bit busy, but you can see you had a monthly high, you had many months of a rest period here. Finally there was a breakout above that prior monthly closing high. That's why your entry level is around 80, which is here. And the reason why I thought it was a buy, just simply because the RSI was moving back above 69.1. We have many months of rest period. You need a rest period before the stock starts moving again. Otherwise the stock would be tired. And you can see that the prior breakout that was successful from a hindsight view was during this breakout here. And again, the RSI also happened to be moving above 69.1. And there was also another shallow entry level for a breakout. You got a monthly closing high, you have 1 month down there, and then a subsequent breakout was also good for a swing trade because it moved the stock from about 70 all the way to the highs of about 81 in about 2-3 months. So this one from an entry standpoint looks good in my opinion. So your stop should be about 5% from your purchase price. Let's take a look at the weekly, and you can see the weekly here also breaking out above the prior weekly closing highs here, and this had also been resistance earlier. So once it broke out here above 80, that was why that was a buy. Here moving above 69.1 is also a good thing, and the daily should be fine because the monthlies and the weeklies look good. You can see here had a weekly closing high and then had what seems like 1, 2, 3 days down rest period, and then breaking out on either day number 5 or day number 4. and that is a fresh breakout on a daily standpoint. That's why you have this accelerated move. Also adding on to the mix here is that the RSI is moving above 69.1. So this one is one you can look at as moving your stops higher, because you're seeing a good gain. You don't want to give up those gains, so you can move your stops higher, or you can just play defensively and keep your stops at your purchase price to protect your capital. Otherwise, from an entry standpoint, this one was a good, well-timed entry. Let's take a look at the other stock that is on your portfolio, or in your portfolio, and it is for Cisco Systems. Your entry price I show here is $27.89. So 27.89, we should be somewhere here. And again, you see that this is not a good entry in my opinion, and I'll tell you why. Because the breakout, as you can see, should have been here. From a timing perspective, this was the entry. Buying it here on the weekly with no rest period is buying it during this move, and the stock is due for maybe even a natural correction because it is tired. It hasn't had this type of a run from 22 to 28, which is about what, $5.50, $6 in a short time. Maybe the last time it did that was here, or maybe even to here. So from about 19 plus 6 is about 25. So this is the other biggest move, $6 move, which led to this drop. So here's a $6 move, almost continuous. I would say the stock just naturally could get tired, even if it moves slightly higher. So timing wise there, not the best. Let's take a look at the monthly. And just from a timing perspective, you can see the most recent monthly entry was after this high. There was 1 month down of rest period here, and so the next entry level is during this breakout. So again, the monthly shows you that this is where you would have gone long, and that would have coincided with the RSI moving to 3-year highs somewhere there. So you can continue owning this one, but with a stop, just because the timing there is slightly off. We want to buy them when they are breaking out. Also, you can see if the entry level was here at 27.89, somewhere here, there was no daily rest period. Whenever you're buying these things, it's best to wait for a slight couple days down. For example, take a look at this ideal situation on hindsight. Stock made a high there, went down for a couple of days, and finally jumped above this previous high after some rest period. So you can see that was an entry there, and that way gives you some thrust to the upside and protects you from losing capital almost instantly. So I would just keep this one on my portfolio, on your portfolio, but with a stop. You can see there was a breakout here above this prior. So there was a breakout. This breakout in the RSI coincides with this move somewhere here, I believe. Yes, early November. So it will be somewhere here. That breakout, I think, also coincides with this. So the breakout here coincides with this breakout here. And just so you can remember, is as long as the stock is holding above this line, so if the stock eventually comes back here and bounces on the line then the stock should continue making new highs. But if it breaks that support line, which is the prior line that began this move, if it breaks this line, then this move here is running out of momentum. So you can say I'm going to own this one from a simple understanding that this breakout has led to a nice fast move, this line, and so as long as the stock is holding above this line, it is from a technical standpoint still healthy. So either you take a small loss with a stop, or the stock comes and bounces on this line and moves higher, giving you a reason to continue holding. Now the next stock that is in your portfolio that you asked me to take a look at is YY, and entry level here I show very nice entry level, very good timing. I'm really impressed by that timing. The entry level there was 71.38, and it is for, so let me take that off. So the entry level there on a short side, this one is a short for you, is 71.38, and of course stock is YY. So somewhere around here. So very nice entry level. And my thinking is probably you are looking at the stock breaking these lows here. That weekly closing low here, that low. Once the stock violated that to the downside, that was a short. And I hope that was the reasoning. Otherwise, maybe you are looking at this, because I don't remember talking about this one, was this break here. So either way, a break there, that break in the trend line, or a break below the previous lows, recent lows, which would have been here at about 72, 73. That was a reason to go short the stock. We also see that it had a relatively big down week because the RSI jumped below 50 on the weekly. There's also another view, which is a reason to go short any stock, is when it breaks a support line here. So there was this line connects these lows, and there was a low there. Once it broke below that, there was a reason to sell the stock. And so this one, to me, from a timing perspective, is a good short. Also, I like the fact, in fact, I love the fact that the stock is making all-time lows on the monthly. That's a great pick on your part. All-time lows on the monthly, great. Also, in fact, from a timing perspective, you can see that it moved to fresh lows, all-time lows here. So when it moved back below 69.1, somewhere here it was also a short, and also again here continues pointing lower. I show here that the MACDs are also making fresh lows. So from a timing perspective, this one is well timed short. Breaking down to all-time lows on the MACD, time to go short. So great pick here on your part. Congratulations on that one. I like that one. So I would continue holding that one, see how things develop. The other one is one that I've been talking about for a while, so I'm familiar with this one. It is YELP. I've been talking about the fact that the moving averages already made fresh lows many weeks ago, so the price is also going to have to make fresh lows. Once the moving averages precede the price, and we can see here closing at a fresh weekly closing low below this prior weekly closing low there. So that stock is confirming that once you see the moving averages move to new lows, the price is going to follow. So that's one trick you can use. We can see here the weekly RSI moving to fresh lows, so that's another reason to be short. We can also see that there's a bearish crossover between the moving averages here. That's another reason to be short. I was looking at this from a monthly perspective. The reason why I've been calling this a short is because it moved to fresh lows on the monthly here, and I was thinking it's a good short for this month of December because it is now moving below 50 for the month. It closed at 50. Now it's funny that I remember this offhand, but it closed at 50.34 on the monthly RSI end of November. So as it drops below 50, the thinking here is more than likely it's going to have a big down month, because as you move below 50 or above 50, you get big swings in stocks. So that one also looks good, and that one is one that I've been looking at, and I still like it as a short. Let's take a look at the other short idea that you have. It is Las Vegas Sands, and your entry level here is at, let's take a look here, at 59 point, so 59 somewhere here, 59.15, and that's okay. That's a good one because it is looking to break this prior low. Let me draw the line properly. So there's a weekly closing low there, and I believe that was the trigger point to go short, and I think that's a well-timed entry level there. You want the stock to continue pointing and trading below that price, the prior low, so around that line. The moving averages here look like they want to make a fresh low. So if the moving averages make a fresh low, more than likely the stock is poised to go lower. Keep in mind, we already had a bearish crossover between the 13-week moving average and the 34-week moving average, just like we had a bullish crossover earlier here in 2012 before this nice move. So bullish crossover earlier in 2012 for a nice move higher. Now we have a bearish cross, and that is why I've been bearish on this stock over the last couple of months. Take a look at the monthly. My thinking here was the stock moving below this monthly closing low, was a trigger point also. So Las Vegas Sands has been a short in my opinion, even on the monthly. Once it moved below the prior monthly closing low here, we had 2 months up, and then on the 4th month it broke down. So this is the reverse for buying breakouts. It is how you buy breakdown. So we had, so let me show you again here. We had a monthly closing low. You got 2 months of a move higher, which is a rest period, and then now it begins a fresh move lower. So that's your trigger point at about $62. And also take a look at the fact that the RSI is just inches away from making fresh lows, or at least fresh 3-year lows. So Las Vegas Sands moving to 3-year lows on the RSI on the monthly is another reason why I believe this one is in trouble. Also, don't forget, and you don't own the next name here, you don't own this one, but they move in steps or win results. And also another one in the same space that looks like if it breaks below to 3-year lows, it might continue moving higher or moving lower. It was a short when we talked about this a couple months ago, even here, as it moved below the prior monthly closing low. So here we see that it had a monthly closing low, 1 month of rest higher, and then on the 3rd month, which is the minimum requirement, it was a trigger short over there. So I think this one you can watch for continued move lower. Now the other one that you have on your list is let's take a look at Amazon. So Amazon, let's go to the weekly. This is the last one on your portfolio as of right now, and I show an entry level here, and the price is 313, so it's somewhere around here. So your entry level on the short side is 313.27. Now I have a problem with the timing there, and because my thinking here is that I had talked about the possibility of this being resistance territory so when the stock came back about a week, 2 weeks ago, I talked about this could be resistance level. So I think that to me the short should have been in the higher 330s, and also could have been confirming resistance from this uniformity resistance band. So here, let me draw that different way. So my thinking is this one, from the way I was looking at this, is you want to short it as close to this line as possible, because the line was connecting the prior highs, and then the stock had come back there. So I thought that was the best time to consider it a short. And also you can see that there was a RSI resistance possibility when it came back to this line. Since previously it had come here and stalled, which was this high, came back to the same level here and stalled. So my thinking was, because the stock had closed exactly on the line, is if it was down 1% for the week, it was confirming a move lower was impending. Also, we had a big down week because the weekly RSI moved below 50 last week. So from a timing perspective, I'm not sure it's a good idea to short it here based on what I was looking at. But depending on what the market does, it could still go lower. Take a look at the monthly now. Yes, the monthly gives you a reason to continue holding, because if this thing slips to 3-year lows, it is going to be a great short. So yes, if this thing drops below this line and also moves below 50 on the monthly RSI, then Amazon is going to have a straight short down for a big gap down, and the trigger point would be somewhere around here. This monthly closing high, it should be at about 310, 307, somewhere there. So anyway, just this monthly closing low, if it is violated, then Amazon is going to be giving us a trigger to the downside, and also that would suggest making a move to 3-year lows on the RSI on the monthly, also moving below 50, which is bearish. And also we see that the MACDs are already trading at fresh lows. So the MACDs trading at fresh lows is bearish, and the other MACD is trading below 0. So Amazon can be held. The timing there was based on my weekly chart, so I'm not sure the timing was great, but the monthly gives you reason to continue holding. On the daily, we had seen a drop from the highs here, so we are drawn a straight line coinciding with the weekly. The time to have gone short was during this resistance here, which was somewhere here. So your entry somewhere here was a little bit off our timing based on this line of resistance here, but you can continue holding it, in my opinion, especially if the monthly can break to fresh lows on the RSI. Eric Mwade, good luck. Let me know what you think so I can make maybe part 2 of this video if you have any questions, comments, or suggestions. I am out. Woo!